Do you think the prices right now are realistic for a place like California?
Again, it's anecdotal, and I think part of it is that so few houses are selling because they're just not available. That's putting upward pressure on pricing to a ridiculous level. I mean, I'm seeing in Orange County what houses are selling for, and it makes, I just look at it and I say, this cannot go on. I mean, you live in areas that were middle-class communities, normal middle-class communities, maybe a little upper than middle, and the houses were a 1965 3-bedroom, 4-bedroom, 2-bath, L-shaped with a double-car garage. Not too long ago was, $500,000-$600,000, where in other states they think that's a ridiculous number. And now what you're having is people go in, redo those houses, make them really sharp and nice, and bathrooms, kitchens, redo them really nice, but they're selling them for $2 million. There's just not enough everyday people who can afford $2 million for a house because there's so few being sold, and this is anecdotal. I see people that I know buying that house, and then I find out, the mom or the dad gave them the money to buy the house, and it's kind of like getting your inheritance early type of thing. And again, these aren't super wealthy people. I mean, they're doing great, but they have access to some capital, and so they'll buy it, but there's not a lot. Now, if all of a sudden 10 or 20 of those houses came on the market, like let's say the market opened up, rates came down enough that people would start selling their houses, and 10, 20 houses come on the market instead of 1 or 2, they're not going to get $2 million a house. When I say that, it's blasphemy in the real estate industry, like it always goes up, but something's going to happen, and I don't know what that is, but something different is going to happen because you cannot sell 1964 houses that are, they've added an addition on it, I take that back. They're 2,500 square feet now, but still selling for $2 million makes no sense.
And then there is this ratio of home prices to income, which
Right.
usually should be around 3 to 4, right? And historically, it's been between 3 to 4. Now it's at 5 to 6, right?
Yeah, and remember in the 70s, if you were married and your wife worked, they didn't necessarily use her income to qualify for a house. I mean, that wasn't that long ago. I mean, 70s, but it was mostly the 70s where lenders would look at that, they could have babies and then she's not working and we don't have this income. That's what happened back then. The upside of it was they changed that so that they could use the incomes and all that. The downside of that is, you're in an area that has no housing, it took 2 incomes now to go into a house, because once everybody got it allowed to use it, the house prices went up because
people have access to more loans.
Yeah, you have more money. You have more money coming in.
Do you see, is it going to be different for different markets? Like you're in Colorado, you're also in California, and you have access to different markets.
Yeah, it's definitely, and I travel the country and I talk to a lot of different people in the industry. So yeah, it's not going to be the same everywhere. But if you're in any place, kind of what you hit on it to say, what percentage of people's income can they put towards housing? And the number's completely unbalanced. It makes no sense. You have to look at what's doing the upward pressure in it. I mean, the other upward pressure we have in real estate is a lot of legal foreign people coming to our country because it's a great place to live in America. And a lot of them come here with real money. They can afford to buy these expensive homes and put pressure on it. Another issue that we had in some of the areas like, say, Palm Springs and those areas, you had a lot of neighborhoods that houses were converted to Airbnb, where instead of renting your house out by the month and it's considered a housing unit, you rented it out by the week and it's really a hotel room. And so you've really kind of hurt that. The amount of housing that's available for people to live in month to month just got taken off. That is because interest rates aren't low anymore, that model is kind of dying. So those houses are coming on the market. So in some ways, I see there being downward pressure, but downward pressure will be good. At some point, it'll balance. And downward pressure will be good because people can afford to buy houses and live, the normal American dream of having, a homeowner having a house.
Are the home builders benefiting from higher housing prices, or the costs of building has gone up? How much of the inflation factor is in going into the cost of building the houses?
I can just tell you again anecdotally, but looking at transactions that I've been involved in or very close to, that when projects were sent back out to rebid, prices came down. So when everything was going crazy, your subcontractors, your plumbers, whatever, they were getting hit for their costs going up, getting electrical gear, from outside the country being shipped in here. Those prices were going up. So now those prices have all kind of come down. The subcontractors aren't as busy as they were before, so they have to be more aggressive in their bidding. They're pushing the prices down, so it's helping out. But for the home builders, what home builders really want is volume. They just want to sell more homes and make whatever chunk they make on that home. They don't really want to look at it as I make a lot more money this way or less money that way. I'm not saying it doesn't matter. It matters. But it's more of how do I get volume? I've got this project here and remember, we're talking the major home builders build 50 to 100,000 homes a year, okay? They need volume to get those houses sold. They have a whole track of homes in a neighborhood to get sold. They're not trying to make the last dollar out of a house. In fact, you can argue that a lot of times some of the best buys are buying from the home builder because they have to sell 100 houses. So what's the value of a house when there's 100 available? It's less. Once that last house is sold, now you want to move in the neighborhood. Well, there's not that many sellers.
So based on your anecdotal experience in this space, how much has the cost of building gone down compared to the highs?
I wouldn't say that it's gone down a massive amount in any way, but what I would say is that the upward pressure or the fear factor's gone. So you'd kind of look at deals just projecting that we're going to build it a year from now and you're going to put more cost increases in it, so then I have to hit a certain price for the house. That's gone down. I couldn't tell you the actual number, but I know of transactions that were falling apart that once they rebid it, all of a sudden the deal made sense again. And the home builders and the land developers, struck a deal and will start building lots.
For people that are looking into investing or buying a house or getting into housing, what are your thoughts? Do you have any thoughts for them?
Clearly, it's got to be long-term. You're going there to be in that house because that's where you want to be and it fits for your lifestyle and your family or whatever. Do not think you're going in and out of this deal that's going to make sense because we don't know where this market's going to go in the next few years. We just don't. As a developer of lots, I'd love to tell you it's all growing great and I can't wait for these next few years. But the reality of it is that we really don't know. We've never done this before where existing homes have 3% interest rates on them. We've never had a situation before where during COVID, checks were just handed out to everybody. So there's a lot of things that we kind of you got to pay for it. It's got to be worked through the system. And so it's slowly being worked through the system. I could tell you for the last couple of years in my side of the industry, everybody's like, oh, by next year, it's going to be better, by next year. So now we're saying, 26 is going to be better. It might be marginally better for the amount of houses, but it's still going to be a small amount because we've got a lot of 3% loans that need to kind of trade in the marketplace. And we need more sellers that want to sell, jump into the marketplace. And if that happens, it's going to put downward pressure on prices. It just is.
Do you have any tips for our audience, for people that are looking to buy these new homes, how they go about negotiating?
I would just say it's not COVID anymore. There's not a big storm of people that are there to buy the house. Unless you're in an area where there's nothing available, take your time. Go see product, go see houses, go see what things are selling for. Push for a better deal. In the end, builders don't want to stay, they don't live in all the vacant houses. They're sitting there vacant. They're going to sell the house at whatever that market price is. But there's nothing wrong with asking and pushing it down and finding out how much room there really is in that price. Nothing wrong with that at all.